Welcome back to The Explainer. Today, we're diving into a digital currency that has millions and millions of users all over the world. But here's the kicker, its price is still a total mystery. We're talking about the puzzle of the Pi network.
And this really is the central question, isn't it? The Pi network is a project that's trying to completely flip the script on how we value crypto. So let's get into it and unpack what's really happening.
Yeah, this whole unconventional approach creates what you could call the Pi valuation puzzle. I mean, think about it. You've got a token that you can't officially trade on the open market. And yet, there's this massive user base holding it, and they are convinced it's worth something. So, how do you even start to put a price on something like that?
Well, the community's answer to that puzzle is this idea called a consensus price. This is totally different from, say, Bitcoin or Ethereum, right? Their prices come from all the chaos of public exchanges. Pi is trying to do the exact opposite, build its value from the inside out, based purely on what its own users agree it's worth.
Okay, so to really get our heads around this inside-out value, we've got to look at two totally different clues. First, there's the price you might see floating around online. And second, there's the value that's actually being used within the network's own ecosystem.
All right, so the first place most people look? Crypto exchanges. And yeah, if you go look right now, you'll probably find a price for Pi. Seems straightforward, but, and this is a big but, what you're seeing there isn't really the Pi we're talking about.
What you're looking at are basically placeholders. Think of them as IOUs or IOU notes. They get traded and the price jumps all over the place, maybe around $30 or so. But this is not the actual Pi token that people have been mining on their phones. And here's the most important part. You can't take the Pi from your app, deposit it on an exchange, and sell it for that price. It's just not possible yet.
Okay, so if that price on the outside is just a bunch of speculation, then what's the real story? Where's the actual value? Well, for that, we need to go deeper and look inside the Pi network's own little economy. And this chart, it shows that conflict perfectly. That little bar on the left, that's the speculative IOU price we just talked about. But look at the bar on the right. That represents the value people are using for real transactions inside the Pi ecosystem. We're talking people trading actual goods and services for Pi, and they're doing it at values that absolutely blow that IOU price out of the water. Now that is a much more interesting clue, don't you think?
Right, and this huge difference between the outside guesswork and the inside activity, this is where the core idea behind Pi's value really starts to click. It's all about an idea that tries to put the power squarely back in the hands of the users. The supporters, they call themselves pioneers, and they really believe, that the true value isn't going to come from some trader on an exchange. Nope, they think it comes from what they all agree it's worth. It's like a massive collective bet on the future of the network, placed by the very people who are building it day by day.
So here's how they think it'll work. They call it the Global Consensus Value, or GCV for short. It's a really interesting bottom-up approach. Step 1, the community itself just agrees on a high target value. Step 2, they reinforce that value by actually using it to buy and sell real stuff in their apps. And Step 3, the network effect kicks in. The more people that join and use that value, the more it becomes the real self-sustaining standard.
Okay, that all sounds great on paper, right? But it all comes down to one single moment, the final test. What in the world is going to happen when they finally open the floodgates and Pi hits the public market for real?
Right now, we're in what's called the enclosed mainnet. Basically, it's a closed system, no outside trading allowed. But the next step is the open mainnet, and that's the moment of truth. That's when this internal, community-agreed-upon value is going to collide head-on with the cold, hard forces of the open market.
And when that happens, we're probably going to see one of two things play out. Scenario 1, the GCV actually holds. The community is so strong and the ecosystem is so useful that the market just has to accept their high price. But then there's scenario 2, the market dominates. This is the classic crypto story, right? The gates open, early holders start selling, and the free market forces the price way down, pretty much ignoring everything the community tried to build.
So, we've looked at the speculative IOUs. We've peeked inside their economy. We understand the consensus theory. But now we've got to face the big question. What is the real value? And to do that, we have to talk about the very real risks here.
Let's be real about the hurdles. First off, this whole GCV thing is a really cool social experiment, but it's not a market guarantee. It can't force an exchange to list Pi at a certain price. Second, you've got a massive supply of these coins just waiting to be unlocked, which could mean a tidal wave of selling pressure the second it goes live. And maybe most importantly, that internal ecosystem has to be so good, so useful, that it can actually justify the high value they're aiming for. That's a tall order.
Which brings us right back to the final critical question. You've got these conflicting signals, right? On one hand, you have the powerful, shared belief of millions of people. And on the other, you have the cold, ruthless logic of the open market. It's setting up for a showdown we've never really seen before in crypto. And at the end of the day, we won't know the real answer until that open mainnet finally goes live.